Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Tuesday. Indeed. In today's program, I want to chat about how the market is really is rejoicing at the moment. We have some recent US data coming out today. And that's the same question I asked yesterday. Are the markets, or are we, or is the markets getting ahead of itself? And have an open conversation about that. But before I get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, hey, indeed. Hello. I hope you're well. So, at this very moment in time, the bulls are very much back in the market, or back in town, as the famous song goes. And I want to ask the question, and it was been asked a little bit over the last couple of trading days, since last week's CPI reading, whether or not we're not seeing a bear market rally like we have done over the last 12 months every now and then, but we are actually witnessing a bull market again. Now, the market is surging higher, again, on the old little fable, which they've been hoping for over the last couple of weeks, whenever they will see a boost in the market, because the market thinks of a Fed pivot. And the reason why the market is now again thinking of a Fed pivot is because the US PPI came in today, that's Producer Price Index, and that came in at the lowest level in 14 months. In 14 months, which means the supply bottleneck, which we've been experiencing over the last 14 to 12 months, is slowly waning, which of course is, when we have a problem with supply, that does indeed increase inflation. Now, the PPI year on year was announced at 8% versus 8.3% expected. And the core PPI year on year was announced at 6.7% versus 7.2% expected. Now, just for those of you who knew, so when they understand what this data is, the PPI is the change in price of finished goods and services by producers. So it's an inflation reading. So the CPI, Consumer Price Index, is what we pay as a consumer. A PPI is what the producers pay to supply the goods and services to us. So there is clearly a sign at the moment that inflation is finally easing, is finally calming down. Add this with the US CPI we had last week, then it is showing us that inflation is beginning to cool down a little bit. But my point being, and I think I'm not the only one who thinks this, is that we keep thinking, right, obviously, because inflation is beginning to come down, that the Fed, and they have said this in all their speech, and there's a couple of people speaking again today as well, don't forget. In all their speeches, they have dropped hints, yes, that they may be less aggressive in the next interest rate decision, but they have not ever once said anything about stopping or even decreasing interest rates. So the market's getting itself in a big, bit of pandemonium, a bit of overjubilation, thinking that, December, the Fed quite possibly might only raise interest rate by 50 basis points in December, and maybe slightly less in January. But they're not going to, they're adamant to get it around about 5%. And then there's now even talk that because we're seeing inflation slow down, they may not be as aggressive to 5%. They might just cap it at 4.75. So I don't know. The market's really getting itself in a over the top fuss. It is good news. It is a sign, that we are seeing a slowdown. I mean, don't forget. Just add this: both the PPI year on year, and the core PPI year on year, they haven't been at those levels since July 2021. So that is a positive. Again, I'm not taking it away. There is a positive, but I'm just thinking, quite possibly we might be getting ahead of ourselves a little bit. And I don't know if this is a bull market or it's just a bear market rally. And we have a look at it. I'm not the only one. Obviously, who thinks this. JP Morgan's bull, one of the biggest, the big bull analysts, they've said, and they've warned their clients that this move is likely overdone. So it's slightly over-egged, it's slightly over-aggressive. So they're warning that this might be slightly overdone, and they're bullish. This analyst team is bullish. So there, and don't forget Mike Wilson, obviously, of Morgan Stanley. He says, okay, this is expecting a bit of a bull, well, a bear market rally now, but he's warning by the end of the year, first quarter, the S&P is going to be back down to 3,000 points again. So again, overall, the analysts are looking at this. Don't get ahead of yourself. But let's have a quick look, see how the market's reacted on the back of this PPI announcement. Let's have a quick look at it, see how it stands at the moment. So obviously, this is the euro. And like I say, this is been a good couple of trading days for the single currency. We're back above 1.04. Okay, back above 1.04. And don't forget, just in September, we were, really struggling around the below the 0.9573 level. We're now back above parity, back above 1.04022. We are finding some key area of support potentially around 1.1271. So yeah, again, the euro has got a boost on this because again, we're seeing weaker dollar because of the market anticipating this. The sterling again, only 2 months ago, back in September, analysts were talking about the sterling going to parity against the US dollar. Look at the turnaround. Like I said in this morning's video, it has bounced back since the September lows by around about 14%. Again, we're trading around the 119.11 handle. 119.11 handle, above the 100-day moving average as well. That, for me, is potentially a key area of interest, which is about 1.116. The dollar yen, 32-year low, way under the 100-day moving average now, back down to 149, so under 140. Okay, so we are seeing that the yen fighting back. So we've seen weak dollar across the board. I mean, let's just have a look at the indices. Look at the indices. Okay, we have S&P 4,020 points. Okay, above the above the simple moving average again. Potential area there. I'm keeping an eye on 3,898 points. So again, like I say, the whole market has got into a very optimistic state. And like I say, this sort of move here, is it a bear market rally, or really are we facing a beginning of a bull market? Let's have a look. So that's something, open conversation to have. There is some other good news as well. And I don't know whether or not, like I say, quarter two, it was all the bad news. But then all of a sudden, all the good news started coming in for quarter three. Because Walmart, they crushed it today. They absolutely crushed it with their revenue, with their earnings report. And don't forget, last quarter, huge worries because their inventory was extremely high. They still got problems with their inventory. Out of the bull market. Hello, my friend. Very good question. Bull market. Okay. Also, it's the difference between the bulls and the bears. The bear market, or bears, believe an asset or the market is going to go down. So when you have a bear market, you see everything is under pressure and tends to fall. And the market moves into what's known as safe havens, like dollars and gold and things like this nature. Okay, Japanese yen. A bull market is opposite. When you're optimistic about a market going up, okay, market going up, then they are bull. They're bullish. So when you see a bull market, it means the market is moving higher. Like currently we're seeing something like this. I reckon it's a bear market rally. What I mean by that, we're still in an overall bear market. In other words, the bears are still in control. We're just seeing a little bit of a boost for the time being. So it's called a bear market rally. But that's the difference between a bull market. I hope that explains it. So like I say, if you believe something's going to go down, you're a bear. If you believe something's going to go up, you're bullish. Okay, or a bull. And the reason why they do that, just some trivia. The reason why they call the bear and the bulls is when a bear attacks, a bear moves downwards like that. When a bull attacks, he's got his horns and he thrusts it up. So that's why bear down, bull up. So that's the difference. Great explanation. Thank you. I hope that makes hope that makes sense in a clear way. But like I say, yeah, Walmart crushed it again today. Absolutely crushed it. So good news all round, because don't forget, quarter two, they were not so good. And they had huge inventories, massive inventories, absolutely massive. And anyway, their revenue was announced at 152.8 billion versus 147.55 billion expected. So a lot better. And on the back of that, we'll have a look at Walmart in a moment. They're obviously, and they are the world's biggest retailer. Their share price rose by 6%. 6%. So there is signs that they're doing favoring slightly better as well. Again, like I say, it's a good question. Oil is supply commodities. Okay, you can live in a bull market. Gold at the moment is often used as a safe haven. So when the market is nervous, they move their money into gold. At the moment, gold has been under an awful lot of pressure, down to the fact that we've had a strong US dollar. So it's not being actually technically being as a safe haven over the last couple of days. Because we're seeing a weaker dollar at the moment, gold is benefiting. Okay, so gold is benefiting from this sort of like bullish behavior. But usually when the market is bullish, they don't tend to put their money into safe havens like gold. It's just gold has had, lost its slightly safe haven status because of strong dollar. Oil can actually go up in a bull market if there is key signs that demand is growing. Okay, and obviously if demand's going up, like manufacturing and things like this, we all need oil for that. That's why oil prices go up, because demand comes back into the market. But a good question. Yeah, so like I say, the big one though tomorrow, because Walmart is done very well. It's really going to be about tomorrow, what Target does. Because don't forget, Target had a really disappointing quarter two earnings, like Walmart. They had a lot of problems with their inventories because of what's happened. A lot of these mega, retailers, because of obviously COVID, they got so much inventory, so much stock, thinking that once everybody comes out of lockdown, everybody's going to start buying again and buying loads of stuff, buying online, but they will start going out and buying because they're excited to get out and spend their money. Their inventories is very, very big. So that's one of the issues. Actually, Walmart did say that the inventories are still extremely high, but still they're very happy with their earnings. So Target's going to be key tomorrow. That comes out tomorrow morning. It'd be interesting to see how they do and whether or not, like I say, again, we are slowly seeing a little bit of optimism come back, and the consumer is going out spending its money again. And some of these retailers, these huge ones, are actually turned the corner or turned the tide, so to speak. So that would be quite interesting to see. Before I got one more story I want to share with you, and we have a quick look. Actually, let's have a quick look at Walmart now, see where they are on the market, see how they're doing. And the US session is now in full swing. Here we go. Right, let me share this with you. Okie dokie. As you can see, it's opened with a gap higher, extremely obviously bullish. Very good earnings, currently trading at $148.55. It closed yesterday just under $143. So obviously this earning report is being considered extremely positive for Walmart and indeed for the retail sector in general, because Target has also got a boost on the back of this announcement as well, with the idea that obviously Target should hopefully perform just as well as Walmart. Let's have a look where Target is right now. Okay, that's Target there. Target again, obviously slightly bullish as well, currently trading around $178.64. Right, before I move on to one more story, there's something else I want to share with you, just as exciting. I'm a big fan of the Elliott Wave theory as well, by the way.
Let's go.
Very big fan.
I traded the DAX in the morning, showed some really good signs of volatility as well.
Anyway,
join James and Stefanos every Wednesday at 1800 UTC for another lesson at Tixee Trading School, your key to a better understanding of the financial markets.
There we go. That's right. Tomorrow night is the new episode of Tixee Live Presents the Trading School. It'll be tomorrow at 6 p.m. UTC. Don't forget, myself, my colleague Stefanos will be discussing tomorrow's subject, and obviously we're open to all your questions and live interaction. Tomorrow's subject is going to be understanding chart patterns. So please come along and join us for that. Don't forget, this is going to be a live broadcast, because live is tixee live. A live means live. However, it's not going to be on YouTube straight away. It'll be YouTube as a video later. So if you want to watch it live with us, then there's a little link, trading school link in the description underneath this video. Simply click on it and register for it. And I hope to see you all tomorrow. Anyway, my final story I want to have a quick chat about is basically a follow-on on what we were talking about yesterday, about good old Elon Musk, and clearly being overworked or having too much work on as he tries to turn Twitter around. And obviously, his huge car company as well. Now, there is some warning, some concerns that because he's so focused on Twitter at the moment, this could greatly affect the confidence in his leadership and the Tesla's brand. So there's a lot of concern that because he's got so tied up with Twitter, Tesla is going to start to suffer. Now, Morgan Stanley, they even go on to say they think because of this issue, and obviously because the issues that Tesla's had, like in its Shanghai plan and things of this nature, Tesla's share price could fall to $150 by the end of the year. It's currently trading at the moment $198. So they are saying, they are concerned that this could be a really big issue for Tesla, a really big issue, because he's so tied up with Twitter. And this is what they had to say. Okay. Now, Morgan Stanley analyst Adam Jonas, he said, while it is not possible to quantify any potential impact on Tesla shares, we're not that the risk is clearly top of the mind. Basically saying the risk is clearly on the top of the mind from our discussions with investors. So the investors are concerned that Musk has bitten off too much than he can chew, which potentially could affect Tesla. So that's been an interesting thing to keep an eye on in the coming days. Anyway, major events this week to come. UK CPI tomorrow. Hands up who thinks it's going to be 11. It's supposed to be 10.6 tomorrow. UK PPI tomorrow. US retail sales, Canadian CPI, Landguard speaking, Australia unemployment rate, US building permits, US initial claims, and UK retail sales. Okay, all big events still to come. Now, markets, actually the US markets as they currently stand, like I said, they're feeling in a happy place. S&P currently trading plus 1.45%. NASDAQ up 2.31%. Dow 30 currently trading in the green 0.74%. Like I said, because of that PPI and because of the CPI, sounds like a wrap, doesn't it? CPI, PPI. Because of this data, okay, the market really thinks we're about to turn a corner. And that obviously inflation is cooling. So they're very much excited about that. Very much so. Oh, okay. Not a problem at all. We'll correct it. Could you try again in a little while? We'll try another one. Re-put it in again. So if you give us 10 minutes, and we'll replace it with another link, then try it again. So just give us 10 minutes, and we'll try it again. Brilliant. Don't forget, you can ask me questions anytime you wish, or simply say hello or share with me your opinion. I mean, what do you think? What do you think about UK CPI tomorrow? I mean, obviously, like I say, the sterling's having a good day, and it has been having some good trading days over the last couple of trading sessions because of this softer inflation reading. I think the crunch for the sterling, okay, obviously is the CPI tomorrow, but more importantly, is going to be obviously what happens on Thursday when Jeremy Hunt presents his new fiscal statement, his new budget plan in front of Parliament. And I think already, to be honest, a lot of that's priced in because I think we already know what he's going to do. Tax increases and cuts in public spending. So like I say, he needs to find 50 billion to plug up the 50 billion hole they've got. That's not loose change you could find under the sofa cushions. So let's see what happens on that. Don't forget, if you think of a question later, okay, you think of a question later, you can either put it on YouTube or Facebook. I will see them, and I will reply to it next time I go live on air, which of course will be tomorrow at round about 9:30 a.m. UTC to discuss the USA, the European session and what's happening in Europe. And again, like I say, tomorrow, trading school, 6 p.m. UTC with my colleague to do, a webinar or an educational webinar, on understanding, understanding candlestick patterns, which will be a really good one. An interesting and cool stream. Thanks ever so much. I really appreciate it. Thank you. Thank you for coming and your support as well. I really appreciate it. Thank you. Okay, if there is no other questions, big shout out to Cypress X, Cyril as well for your questions, and SMF 790 as always coming along and say hi. But I really appreciate it, and I appreciate all of you coming along to watch. I always really appreciate that. I very much do. Very much do. Anywho, till next time, as I always say, if you're watching me on Facebook and you enjoy this little video, by all means give us a follow. If you're watching me on YouTube and you enjoy this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoy this little video, find it interesting and useful, by all means, give me one of these. It's nice to know that you like what I do. I really do appreciate it. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.